Recently, I talked about why business acumen is important for managers, department heads, and project managers. Now, I want to do a deeper dive into some of the semantics that are important for you to understand if you want to get ahead and show that you have business acumen and financial knowledge. And if you want to know more about what financial acumen is and how to use it on your project, your department, or your team, then check out my video. I'll put a link here and on the end card. Now let's get right into it with 10 things you need to know for financial acumen. First one is the term revenue. What does revenue actually mean and how do you calculate it? Income from sales, services, or other sources, and it represents the amount of money earned by the company. Now, the way that might be calculated is that the company earns $50,000 a month from sales of direct products. You might also do some freelance work within your company, so your total revenue for that month will be $55,000. What's an expense? They are costs of doing business. So let's give an example for what an expense could look like. A software development company could incur $10,000 in monthly expenses for employee salaries, office rent, software licenses, and may have another $2,000 allocated in costs and taxes. Their total expenses for the month might be $12,000. Now, I want to caution you that actually expenses can be very complicated. There can be all kinds of direct costs and indirect costs related to expenses. So you'll need to look for things that also get allocated to your department. Talking about a building, for instance, you might depreciate that, and then part of the depreciation will go to every department that uses that building. Return on investment, or ROI, measures the profitability of an investment by comparing the net profit to the initial investment. So for instance, if a company is considering implementing a new inventory management system, the estimated project costs, including software, hardware, implementation, and training, might be $100,000. The company expects the new system will reduce inventory holding costs and improve order fulfillment efficiency, because what you're doing is annualizing project costs against annualized benefits. Debt to equity ratios helps the company understand how they're leveraged. And so assessing the company's leverage by comparing its total debt to its stakeholder equity, these are very important numbers for any kind of business where they have fiduciary responsibilities to make sure their debt to equity ratio is within certain parameters for their industry. Profit margin. This is essentially the profit percentage you earn for sales or transactions. How efficient are you at creating profitability within your company? Assets and liabilities. Essentially, an asset is something that helps generate revenue, and a liability is money you owe. How much asset versus liability you have, really important to understand the balance sheet, which is a document we'll talk about in our next series about reading financial statements, and cash flow. Cash flow basically says I might have assets and I might have expenses, but is my revenue coming in at the right time so I can pay my bills? So if you have a small business and you're getting $5,000 in cash from customers and you're paying $3,000 in monthly expenses, out of their income and your net cash flow is $12,000 in this example. Another thing project managers need to understand, especially when they're doing an ROI-based project, is the break-even point. At what point will the project start to return value to the organization? So that's the break-even point. Total expenses for the project, and you make revenue from that project. Point at which those balance out is your break-even point. Opportunity cost. If you're deciding to do this project, project A versus project B, there's an opportunity cost because you only have so many dollars in your budget in order to decide which project is going to take precedence. And then something project managers really know about is the business case. The business case kind of ties all of this together. It's essentially looking at what you need to know in order to say that this is the right project. I hope you found this information helpful. If you'd like more information, check my blog. The links are below. And I'll talk to you next time on ProjectSkillsMentor.com. Bye-bye, everybody.